7 secret credit hacks banks hope Gen Z never finds out. I built an 800 credit score by 20 using tactics banks actively try to hide from young adults. And the craziest part? The bank that denied me for a $500 secured card when I was 19 is now pre-approving me for a big $30,000 credit line with zero annual fee. Same me. Same income bracket. The only difference is I learned how the game actually works instead of how they tell you it works. Because here's the dirty truth nobody mentions in those financial literacy classes. Banks make money when you're confused. They profit when you carry balances. They celebrate when you miss the fine print. So they have zero incentive to teach you what I'm about to share. 3 years ago, I was sitting in my apartment with a 580 credit score, getting rejected for basic cards, paying $200 more per month for car insurance because of my credit, and genuinely believing I was just bad with money. Turns out, I wasn't bad with money. I was playing a rigged game without knowing the rules. Today, I'm going to show you the 7 specific tactics that changed everything for me. We're talking about the authorized user hack that can add 50 points in 30 days, the secret credit limit increase method that doesn't require a hard inquiry, and the one phone call that wiped $1,400 in interest charges off my account. Oh, and hack number 5? That one alone saved me $11,000 on my first car purchase, but I'm saving that because it requires you to understand hacks 1 through 4 first. Let's get into it. The first hack is something called credit piggybacking, and banks absolutely hate when I talk about this. Here's how it works. Credit scores aren't just about your accounts. They're about what appears on your credit report. And here's what most people don't realize. You can inherit someone else's credit history overnight without them giving you their card, without them adding you to their checking account, without any risk to their credit whatsoever. My older sister had been using credit responsibly for 8 years. Perfect payment history, low utilization, no late payments ever. When she added me as an authorized user on her oldest card, that entire 8-year history appeared on my credit report within 45 days. I went from a 580 to a 634 without doing a single thing differently. That's 54 points from one phone call. Now here's the part banks don't advertise. You don't actually need to use the card. You don't even need to receive a physical card. You just need to be listed on the account. The credit bureaus don't know if you've ever touched that card. They just see the account history tied to your social security number. Find someone who trusts you, a parent, an older sibling, a relative with good credit, and ask them to add you as an authorized user on their oldest card with the highest limit and best payment history. The card never needs to leave their wallet. You're borrowing their credibility, not their money. But here's the caveat nobody mentions. If they miss a payment after adding you, that late payment hits your report too. So choose wisely and stick around because hack number 4 is going to show you how to protect yourself if this ever goes sideways. The second hack involves something called a soft pull credit limit increase, and this is where things get tactical. Most people think that asking for a higher credit limit means taking a hit to your score. That's because most people call the general customer service line and trigger what's called a hard inquiry. Hard inquiries can drop your score by 5 to 10 points and stay on your report for 2 years. But here's what the banks don't advertise. Almost every major credit card issuer has a separate process for soft pull increases. Chase will do a soft pull if you request through the app. Capital One's internal system uses soft pulls. American Express will soft pull for existing cardholders through their online portal. Discover does the same. I called Capital One 3 times in 1 year and got my limit increased from $1,500 to $7,500 without a single hard inquiry. Why does this matter so much? Because of something called utilization ratio. If you have a $1,500 limit and you spend $450 a month on groceries and gas, you're at 30% utilization. That's dragging your score down. Same spending with a $7,500 limit, you're at 6% utilization. That looks incredible to the credit bureaus. Your score can jump 20 to 40 points just from the ratio change, with zero change in your actual behavior. The secret is calling on specific days. Request increases right after your statement closes, not right before. And if they mention pulling your credit, say these exact words. I'd prefer to proceed only if this is a soft inquiry. Can you confirm the inquiry type before continuing? That sentence has saved me from hard pulls 3 separate times. Hack number 3 is the one that made me realize the entire credit system is designed to confuse you on purpose. It's called the 48-hour reporting window, and understanding this changed how I time every single financial decision. Here's what I mean. Credit card companies report your balance to the bureaus once per month, usually right after your statement closes. Not when you pay. Not when you swipe. When the statement generates. So if you spend $2,000 throughout the month but pay it off 3 days before the statement closes, the bureaus might only see a $200 balance. Your utilization looks like 10% instead of 100%. I tested this myself. In January, I let my statement close with a $3,400 balance on a card with a $4,000 limit. That's 85% utilization. My score dropped 31 points that month. In February, same spending, but I paid down to $400 2 days before the statement closed. Score went back up 28 points. Same money spent. Same income. Completely different credit profile. The timing hack gets even more powerful when you're about to apply for something important. A car loan, an apartment, a mortgage pre-approval. Pay every card down to under 3% utilization the week before you apply. Banks call this optimizing your credit snapshot. They don't teach you this because they want you carrying balances. They want you paying interest. They want you confused about why your score fluctuates randomly. If you're picking up what I'm putting down and you want more of this, hit subscribe. I drop one of these every single day. Now, speaking of creating content that actually connects with people, if you're building any kind of side business or personal brand, you need to sound professional without recording audio for hours. I've been using 11 Labs for voiceovers, and it's honestly wild how natural the AI sounds. Check the link in the description if you want to try it. It's saved me probably 15 hours a month on content creation alone. Hack number 4 is the Goodwill adjustment letter. And this is the one move that cost me $0 and saved me $1,400. 2 years ago, I missed a payment. Life got hectic. I was switching apartments, and I genuinely forgot. That one late payment dropped my score by 67 points overnight. I thought I was stuck with that mark for 7 years. Then I discovered something called a Goodwill adjustment. Here's what I did. I wrote a 1-page letter to the creditor's executive office, not customer service, the executive office. I explained the situation honestly, acknowledged my mistake, highlighted my otherwise perfect payment history, and asked them to remove the late payment as a goodwill gesture. I sent the same letter to the 3 credit bureaus. Within 40 days, the late payment was gone, completely removed. Score jumped right back up. The key is being genuine, taking responsibility, and having a track record that supports your request. This works best if it's your first late payment with that creditor. Google the executive customer service address for your specific bank. It's usually different from the general mailing address. Type the letter yourself, sign it by hand, and send it certified mail so you have proof. The worst they can say is no. I got a yes. Hack number 5 is the one I mentioned earlier that saved me $11,000. And it's probably the most counterintuitive thing I'll say today. Stop using credit score simulators to plan your moves. Seriously, those tools built into Credit Karma and NerdWallet, they're directionally useful but mathematically incomplete. They can't account for your specific scoring model, your trended data, or how specific creditors weight different factors. Here's what happened to me. I was pre-approved for an auto loan at 7.2% APR. The simulator told me that paying off a small collections account would boost my score and get me a better rate. So I paid it off. My score dropped 23 points the next month because paying off the collections account updated its timestamp, making it look like more recent negative activity. I ended up getting approved at 8.1% instead. On a $28,000 loan over 60 months, that difference cost me roughly $1,400 in additional interest. The lesson? Simulators don't understand context. Before making any major credit move, talk to an actual loan officer first. Ask them specifically, will this action help or hurt my approval odds with your institution? Different lenders use different scoring models. What helps with one might hurt with another. The simulator almost cost me $1,000 because it couldn't factor in the timestamp issue. Real humans at lending institutions can tell you exactly what will move the needle for their specific approval process. Remember how I said Hack 4 would protect you if the authorized user strategy went sideways? Here it is. Hack 6 is called a credit freeze rotation, and it's your insurance policy against everything going wrong at once. Here's the rapid-fire version. You can freeze your credit for free with all 3 bureaus, Equifax, Experian, and TransUnion, in about 15 minutes total. When your credit is frozen, no one can open new accounts in your name, including you. But here's the hack. You can temporarily unfreeze just one bureau when you need to apply for something. Most creditors only pull from one bureau. Discover typically pulls TransUnion. American Express usually pulls Experian. Research which bureau your target creditor uses, unfreeze just that one, apply, then refreeze immediately. This protects you from identity theft.